In this video, I'm going to show you exactly why I did a poor man's covered call on UPS right here, right now. And what I'm about to show you is absolutely going to blow your mind. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today I am going to show you a poor man's covered call trade for which I did on UPS. But if you wanted to buy shares and write a covered call, this actually applies to that strategy too. And hey, if you wanted a cash secure put right here, I'll tell you what, I'm going to show you exactly why that might be a good plan too. But in this video, I'm going to show you why I use the poor man's covered call. I'm going to show you the new poor man's covered call tracker and where to get it. But what you're about to see here is absolutely insane. When we use an out of the money strike with a poor man's covered call, this trade I'm about to show you, if my shares are taken, and I say that with an asterisk because you know we don't have shares, if my shares are taken, I'm going to make 15.61% cash on cash in 28 days. I'm going to show you exactly how I do that. And look, if my shares aren't taken away, I'm going to pocket a very tidy $1,550 or 3.71% in that same 28 days. So hey, look. If you want the spreadsheet that you're about to see, I need you to go to cptdashboard.com, click free spreadsheets, and you'll be able to gain access to what I'm about to show you. Before we get going, if you like anything you hear, if you like the idea of generating cash flow using the selling premium strategy, hey look, I need you to subscribe to the channel. I come back every single week, show you timely and relevant trades that are happening today because quite frankly, I'm in retirement, need to generate cash flow to pay the bills, live the good life. And look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. I'm showing you what I sent to the members about this UPS poor man's covered call. Yesterday, I noticed that UPS had tailed off. And I'll tell you what, they absolutely fell to where I believe is their near-term support. And in fact, I think it's their long-term support. So I sent an email out to the members saying, hey, look, if I'm going to get involved with UPS, I am absolutely thinking about the poor man's covered call. And here's why. I can actually leverage more shares with a Leaps call option versus using all that capital. You know, UPS is trading around 169 when I send this email. So if I'm going to leverage 1,000 shares, that would be $169,000. So I'm not going to do that. With that said, if you are interested in using the covered call, well, you can do the same trade that I'm doing. I'm just using it with the Leaps call option, which is mimicking me owning the shares, but I'm actually writing a standard covered call. And what I decided to do is let the members know ahead of time that I'm thinking about it. And in this case, I said, look, if this thing gets down to 168, I'm going to look to pick up that April 24 Leaps call option. And then once I pick that Leaps call option, based on my research and my initial trade setup, which I'm going to show you here in a minute, I was going to sell the 170 30-day covered call. That's the heads up part of the email. Because what happens is I end up taking on this trade and I end up showing the members. Let's go ahead and take a look at what the trade looks like, and then I'll show you the poor man's covered call tracker with the initial trade setup, and we're going to look at the chart because I'm telling you, I love where it's trading right now. Like I tell you all the time, when I send out a trade idea, I'm putting in the legwork, man. So I'm probably going to do the trade, and in this case, I did. This is what I decided to do. The members got this. And by the way, if you go to my website, cptdashboard.com, click Upgraded Dashboard, I have a 1 free month offer there. A lot of people take advantage of that. That is absolutely the best deal. It's a 1 free month offer. Go over and get it. cptdashboard.com would love to welcome you aboard. Well, here is the trade, and you can see I actually put my money where my mouth is, and that's exactly what we do here at the membership. I put out trade alerts, man. Generally, I'm doing the work. I'm going to go ahead and put some skin in the game. Well, in this case is what I ended up doing. I ended up buying that 130 strike. Now, I'm going to show you in the initial trade setup what that looks like and in terms of the cost for the trade. right? What's the time value portion of that trade? I'm going to show you that. But I went ahead and picked the 130 strike. I paid $41.80 for that. Went ahead and took control of 1,000 shares by doing 10 Leaps call options. And you could see it's basically a 95 delta, which means my Leaps call option will move about 95% of a $1 move in UPS stock. And you could see I invested $41,800 for this trade. Well, the very first trade I put on is in fact the 175 strike. I didn't pick the 170, I went 175 because I actually think, and I'll show you on the charts here in a minute, that I think UPS is going to find itself bottoming here, and then it might easily find itself at 175 in the next 28 days. So we're going to go ahead and use the 175 strike. We get $1.55 for that, and on 10 contracts, that's $1,550 upfront money put in my pocket. Now that's 3.7% based on cash invested, right? Remember, I'm not buying 1,000 shares of UPS at $169 or $169,000. I'm using a Leaps call option for which I paid $41.80. I bought 10 of them. Now we're going to go put on that covered call trade for which I can get premium as if I own the shares, right? Because I buy the Leaps in lieu of the shares. Ultimately, I still have the ability to buy somebody's shares at 130, and that's what I'll end up doing if I need to close this trade. But here's the deal. If UPS moves to 175, my Leaps call option based on a 95 delta, if the stock gets to 175, will be worth $46.78. That's actually a profit of almost $5,000. If you combine those two, that's $6,533. But look, that's all pie in the sky. The real money is right there. $1,550 in my wallet right now. Now we let the trade go. And if the stock gets to 175x, take my shares, I will unravel this trade by either buying back the near-term covered call and then selling my Leaps for a profit, or I'll just let the market maker deal with it. They'll go ahead and pay me $175 a share or $175,000, and then I'll get slapped with a short sale. I'll clear that, sell the Leaps, knocking it down. Now that's the actual trade that was put on. Let's go to the Poor Man's Covered Call Tracker and see how that's set up in the initial trade setup. Now, if you've never seen this before, this is quite simple. All you have to do is plug in data in the yellow cells, and what you're going to find, it's going to tabulate all the numbers for you. Now you start with the Leaps call option side first. As you can see, when I put in that it was trading at 169x, and I picked that 130 Leap strike, I paid $41.08. It was the 95 Leap, and it was 10 contracts. Look at the time value portion. And that's the beauty here. If you know options, and I believe you do, you know there's two portions to an option price. You have your real money or intrinsic value, and you have time value. Now, in this case, we have intrinsic value. Well, we want to make sure that time value is as minimal as possible because remember, that is the cost of this trade. Let me paint a picture for you. There's somebody out there in the greater stock market that owns UPS shares. They write a covered call where the stock's trading for $169.71 and they actually pick the 130 strike and they get $41.08 for it. And there's the trade. There's the covered call on their side. Well, see, on this side, because I need to purchase the Leaps call option, I'm buying the call option. So I'm going to go ahead and pay the $41.08. Well, the question is, how much time value did I pay? Because remember, intrinsic value, nobody makes anything, right? He doesn't make anything, I don't make anything. And that's it. Everything else is time value and everything else is profit for the cover call writer. In this case, it's $1.37 a share. You can see it right there. It actually represents less than 1%. And that is our wheelhouse for using big S&P type companies when we're going to do a poor man's cover call. We want that time value to be less than 1% if we can. Then we go ahead and plug in all the data for the near-term cover call. And as you can see, I went ahead and picked the 175 strike. I got paid 155. The stock move plus the premium is basically going to equal that. And you can see right here in this 28-day window, if my shares are taken away, if the trade ends and it's above 175, I will collect cash on cash, 15.97% or $6,560. If the shares do not finish above 175, I'll pick up a very tidy 3.77%. or $1,550. And I'll tell you what, that's a fat $1,500 when you consider I only invested $41,000. Now we're over at the tracker side, and this is where you would manually plug in your data so you can keep track of all your trades. See, here's the idea. We're going to buy this leaps call option, and if our shares are taken away, they're taken away. We end the trade, we sell the leaps call option, done deal, wash our hands, we look for the next trade. But if we're going to use that leaps call option for multiple trades, meaning I buy back an option or I roll options. Now, looking at the tracker, you can see I plugged in the very first trade, and you can see where it is absolutely tabulating the numbers here. So if we added more and more and more and more covered calls, all of this would get tabulated. At the top, we would see how many covered calls we collect, and we could plug in where our leaps call option is, and we'll see how much money we're going to make or lose with that. And then, of course, you get the totals here. So this is how you keep track of your poor man's covered call trades, because you're going to be putting on potentially multiple ones. Real quick, you can see I've added all of the critical things that are needed for poor man covered call trading. Look, I've been doing this long enough now to know what's important, and I incorporate this into all my trackers. So if you ask me, it's very important to know your expected stock move. We do that very first trade, and maybe you buy that option back and you're looking to write your next covered call. Using the expected stock move calculator helps you with that. Also, where might my leaps call option be priced with my new covered call that I'm writing and the strike price? So you get a feel right off the bat, man. If you put in a strike price and all the data here with this portion of the tracker, and this is red, then you need to know that. And I need to know that. That's why I incorporated it into my tracker, and I've been using it for years. Also, how about a buyback calculator? A lot of times a stock will go higher, and of course when we go to buy the option back, we have that time value we're worried about. We don't want to pay a lot of time value, so you might want to work the trade a little bit, plugging in the numbers, and then when the time value difference is such that you'll accept it, then you go ahead and possibly buy it back. And there is another portion of the poor man's cover call tracker where if the market maker takes your shares, I have a little calculator for that here too. The release of the new poor man's cover call tracker will be posted on the website this weekend. You'll be able to go there and gain access to my website, cptdashboard.com. Now, let's take a look at UPS stock real quick, because why did I enter this trade? Basically goes back to the last time UPS had such wonderful support. I actually like this 167 number quite a bit. And the last time we used UPS for a poor man's cover call, if you remember, I did that video when it was dancing off that 167 number. Now, there were other conditions involved. They were going into the strike talk, and there was worry that they were actually going to go on strike. Turns out that that doesn't seem like it's going to happen. So the stock ends up rallying like most of the stock market, peels back. So now it's peeled back to that 67 support again. And look, if I'm going to get involved, you know me, I want to get involved in the lower 25 percentile of the range instead of the top 25%. And sure enough, we're right back at it. You've seen where it has traded before, and you can see every single time it trades at support, Wall Street comes back to it, and they run it higher. I believe that might happen here. And all I need is a 30-day window. If it trades here and moves higher again, then I'll have my shares taken away, hopefully, at 175. Look at this. 175 is right there. I mean, this thing could try to test resistance again, and I could have my shares taken away and collect the entire 6,500. So what I want you to do is this. Anytime you're looking for a new stock, I want you to look at the charts. The charts tell you a story. And if you're not reading it, then you're going to find yourself getting involved up here versus finding great entry points down here. It is much more likely, much more favorable that UPS will ride this support line versus crashing and burning. It's one of the biggest companies on the planet, and they have a huge dividend with profits, and guess what's right around the corner? The biggest part of their year. We have Christmas coming. So look, UPS right now at 167 to me seems bankable. And I'll tell you what, I might even take another position if this thing lags a little bit. Although I believe we could get the same kind of action where it trades right in this range and then possibly breaks out. All I care about is 30 days, and after 30 days, I move on. And hopefully I'll have my shares taken away and we can make max projected profit. Now look, we said a lot there. I think at the end of the day, what we always want to do is find great entry points. And it's easy to do. You don't have to be a rocket science to read those charts. You look at that great support, and then what you try to do is make good decisions based on what the charts are telling us. And when we use great S&P type companies, it's a little more predictable than others. I'll tell you what, if you're trying to do that with Tesla, kind of tough. But when you're using the slow movers like UPS, instead of buying shares, think about the poor man's covered call. You could actually leverage more shares with less money. Think about it. I leveraged $41,000 versus $169,000. I mean, had I had some nads, I could have doubled that up, maybe invested half or $80,000 controlling 2,000 shares. That's an idea, and I might even consider doing it this week. Hey, look, I want you to stick around. Go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. But more importantly, be on the lookout for the new Poor Man's Cover Call Tracker. Tell you what, I use it every single time I put on a Poor Man's Cover Call trade. It's absolutely one of the tools in my toolkit that we have to use to try to be profitable in this stock market. Hey, look, I'm going to leave it right there. When I come back next time, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.